is a good day, it is a good day. This is a trade review video, so I'm going to be analyzing my trade review, and because it is also a swing idea, it's gonna also be a narrative structure-based analysis. So no need to be scared of anything. It's just something that I will be working on, planning to you the trade ideas, explain to you why, if you're in the charter, why this was a market maker model. And I'm not going to go into a deep detail analysis. If you want that deep analysis, you have to be charter, because I've given way more context. But this is still a good video to take trade ideas on a swing perspective, and also to be able to spot those opportunities. Because if you're a scalper, most opportunities that are easier to trade come in swing. Now, for sure you can scalp. I've been scalping, for the last quarter, literally for 4 months. So I've been only doing scalps on Top Step. This is a Super ICT account. I've been doing some scalps. It has not been going well for the beginning of the month and the quarter. But Q2, I believe, will cover all of these losses and more. So no need to be alarmed. It's just the way it is, and I'm going to show you how I've been able to start from 5 macros in this position to 10 now, so roughly a mini, and to even at 718, so roughly here, almost catch the low of the manipulation again. And it's beautiful, because when you have structure indicating expansion and you have macros showing manipulation, and you're in Q2, which is manipulation, well, it's tipping your hand to say, don't fall for my stupidity. Don't fall for the way that I'm trying to trick you. It's just a trick. So that is my perspective on how I see it. And that's how it is. So yeah, first thing first, why did I enter here at this entry here? So on a micro perspective, micro, M-I-C-R-O, we had this macro. Now macro, not from a vision standpoint, but from a algorithmic standpoint. You wanted advanced time techniques, you wanted the real shit, you wanted the real stuff. I'm going deep. If you don't understand, you need to study, you need to rewatch this video. I'm gonna go fast, okay, because I have stuff to do. My luggage is not completed. A little bit of water. I want to make sure everyone understands, so I'll speak clearly, but I won't waste time. So there we go. Sorry for this. Okay, we had this manipulation wick that I expected at the manipulation time. I entered at the extreme discount once we rebalanced it. So you can see here, we had this thing, and I wanted to use this as what PD array? What PD array? PD array is this. If you're using it for a long, what are you? This sounds weird, right? Yeah, this is the what PD array? You need to know this. The guillotine method. This is a guillotine, right? It's slicing, and you might not be able to understand what I mean, but just remember that it's slicing. Okay, it's going straight like a scissor cut. Okay, so this inefficiency here was made. We dropped from it. We came here, touched it, and I entered. Now, what I expected at this point was some form of expansion or accumulation. In any case, I don't care. I don't need to be that precise. However, the macro right after started to expand, pretty good, and then we had this 11 to 11.15 drop. This didn't worry me at all. My stop loss was way lower than that. My stop loss, you can see it actually. My stop loss was at this level here, and this purple line level, this is very subtle, okay, but this purple line level, if we come back here, it's the opening at midnight. Okay, my stop loss was very close. I believe it was at 58, so like what, 3 points, 5 points below this thing. Super precise. And I've put a picture in the community of that thing being there, so you can see that if you're interested. Otherwise, let's continue. I entered here, we entered this. I expected manipulation, because what is the time of 11 London close? For sure there's going to be a manipulation. It's the time for it. It's the time to manipulate at the specific times of opening, the specific times of entries. So I'm not worried about that. What I'm worried about is how deep and what time frame. And since we've been working on a 4-hour time frame, I'm confident that the 15 at least will be sufficient to provide some entries. So as you can see, midnight, very precise. And this was, I was like, okay baby, we're holding this thing. I'm not gonna take profit anything at these equal highs. Even if you're just starting with ICT concepts and you're trading this thing, for sure take partials here at these equal highs. This is the easy target. This is absolutely, it's gonna get crushed. I did not take anything. What happened? Well, we crossed these equal highs. You can see this beautiful fair value gap here. Again, same formation in price here. Discount. Let me add this so you can understand what I see. Extreme beautiful discount here happening again. Same formation in price. You can see the reaction at 25. But let me reverse that so you can understand exactly what I mean, because that's what I mean of extreme discount. As you can see, again, what is this? What is the low? 21,671.25. What is the low? 21,26761.75. So 2 tick difference from this low and this extreme discount again. Now you're starting to understand something, right? You're starting to see it. Extreme discount in the 4-hour, extreme discount of the fair value gap that is important at Q2 of Q2. Signature here. Signature here, right? You're starting to see it. And now guess what? Guess what, buddy? Guess what? Oh shit. Oh shit. Here, very precise. Very precise. Nothing. Barely any price action here. Wick and then flying with expansion. Super precision. As you can see, extreme discount. We had this accumulation phase. This gap screaming that it's gonna get filled, and this formation in price inside of this inefficiency that is bread and butter. Fair value gap, accumulation, here reaccumulation, if you know your models, expansion. And this is what we've been getting, which is why internally what I wanted to see here, price being here, addition of entries here, 718, entries here, entries at 823. Now internally, intraday, very precise here. Sorry for that, I was interrupted by someone calling me. Okay, we had this entry here at 823. Let's see, 23. Was this in the 1 minute chart? Yes, it was at this fair value gap here. You can see. Now you can also see something. It happened at the macro. So I've added a position here. Now my stop loss again very far away. But still, I found that this could be a good opportunity to continue to expand because we've had the same formation and structure. Now, I'm not here to show you perfection. I'm showing you how it's really being done. So you have this gap here. Accumulation, same structure as in our 4-hour chart. Accumulation, reaccumulation here, and the order block and the end of the macro. So those for me are enough to enter. And as you can see, I did not enter most of it. I entered 2 micros. So risk managed, expectations managed, and stop loss properly managed as well. Now we came out through the day continued. This, by the way, this red thing that you're gonna see in my chart is a daily bearish fair value gap. So we're not gonna get into this right now. If you're in the mentorship, you know why I'm also expecting every day, because this is also 25% of this, right? Where the half. But now you're starting to understand something, right? You're starting to see it. You're starting to see the extreme discounts everywhere. I hope you're seeing it. Now, this happened. We had this structure in price today. It's okay. Needless to worry. This is midnight, by the way. You can see here this purple line is midnight. I think again very much, you know, crazy, but it's gonna be useful as we go throughout the day. What was most important today was 8:30. 8:30 opening price. So the news embargo opening. You can see that every time we went below this 8:30, boom, opportunity to buy, opportunity to buy, opportunity to buy. Now, I was not able to be in front of the charts all day. That's why it's 4 p.m. and I'm doing this thing. But whenever I had the chance, I did what I could. And if it was a good time like this, I would buy. If it was nothing, I would not do anything. And when I saw this melt, I was like, ooh, this is my time to load up. Load up. Let's get to 10 macros, aka 1 mini, and continue our positioning. Now, the macro here, I'm going to see that at this gap, I expected to bounce back because, again, we're in Q2. These 315 to 345 macros are not silver bullet. ICT might have told you that 3 to 4 p.m. silver bullet is a silver bullet. It's going to continue expand. No, you have to adapt everything with narrative and time. And that's why whenever we had this action, I wanted to buy. Now, the first buy was at 741. So because I got an encroachment of this beautiful, let me show you so you can understand. Wrong selection. Let's go zoom. This is the 1 minute chart, right? So you can see that half of it is 742. My entry 70.1.25. 3 ticks difference. I get a little bit of discount there. And the other was 718, which was the very low here, 718.5. So as you can see, extreme discount. Why? Because we went outside of that daily FEG. And also more precisely, because we're going to tag these lows. I didn't want to tag these lows because I'm aware the market can do SMTs. So fail to grab sell-side liquidity, which would then give an indication of bullish action, which is what we're having as we speak. So if we have this SMT, I'm not looking for exactly a liquidity purge. I'm looking for, at least I'm getting close. And as I'm trading with TradingView, I'm doing market things. Even though I try to do limits, they don't even feel at the right time. So I'm doing market. And whenever we went diving lower, I was buying. So you can see here, the entry 718.5, very, very close to the lows. But again, if I would have put my buy limit here, would not have been entering. So nothing of being surprised. What happened here? We had a manipulation here at what time? 4 o'clock. As I was doing this discussion, and again, 4 p.m. manipulation. You see it now? You see how badly they want you to fear the markets, how badly they want to purge longs? That's a signature, guys. That means that they're entering here, they're entering here, they're entering, and every time we're below at 30, here. But now they're swing traders. They're not scalpers. So what do they mean? They have their stop loss way further than that. They have their stop loss way further. Meaning what? They're buying here, buying here, buying here, buying here, buying here, buying here, buying here. But they're also turning the algorithm to create these opportunities and also purge what? The people that long here, the people that long here, the people that long here, and that don't have the ability to swing or that don't have the technical knowledge to swing. So it's all connected, guys. Anyways, let's go into now the targets and the expectations. This is the daily chart. Well, I'm not gonna talk about this thing, but it's juicy. You can just have an overview. We have this buy sell liquidity here. We have this untouched buy sell liquidity. These, I believe, yep, it's very, very good highs. Let's go into 4 hours so that it's more clear. Let's remove the executions so that you are more focused and it's not cluttered. This liquidity pool, interesting. This liquidity pool, interesting. This even more interesting. So the black liquidity pool here, you can see, is the first time that I might want to take partials out. However, I'm committed to my swing and I will be off the markets for 2 weeks. So, well, I'm going to be following it, but not as active. So this I wanted to be purged, and I want ultimately the all-time highs to be taken out for us to go here, which is what? 22,600. Now you're like, what? 22,600? What the fuck is this? Well, if you take this thing, it's 456, it's roughly close to 500. So of course it's going to go to 500, and of course it's going to go trespass it. Where? 600. Big number. You can see all my executions throughout the years. This is not a account that I've played with. This is an account I've been trading for roughly now, well, it's gonna be 2 years, but it's been roughly a year, we can say, because December 2023 is roughly January 2024, which is roughly a year from now. So a year and a couple of months. But as you can see, this is how we do it, and I'm gonna hold the swing until we hit sky. So that was my narrative building. Of course, once we hit these levels of liquidity, we want to see sensitivity around this daily inversion fair value gap. Let's go into the daily chart and remove the execution so that it doesn't clutter your mind. We have this daily. I want this to be inversion, and I want us to continue to gather the liquidity. We've been chopping here a lot. Since December 20 something. So I would be very, very interested that we finally get out of here and we take these highs. And usually February is the perfect sessions for swings. And that's what I'm doing here. Thank you, G's. I'll see you in the next one.